if you're planning to invest in S&P 500, in this video, I will tell you two things. One is how do you invest in S&P 500, and second, I'll provide you a comparative analysis of top 3 S&P 500 index fund and top 3 S&P 500 ETF. My name is Kanak and welcome back to my channel. And through this channel, I share valuable information from the world of finance, economics, and investing. So let's get started. S&P 500 is an index that tracks the top 500 companies in the US. It is a market cap weighted index, which means company with a larger market cap has a higher representation in the index. Now, as an individual investor, it is not operationally and financially feasible to buy 500 different stocks and manage these 500 stocks as per the changes happening in the index. So as an individual investor, there are two ways in which you can invest in S&P 500. First is you can either buy S&P 500 index fund or you can buy S&P 500 ETF. Now, what is the difference between index fund and an ETF? So the underlying objective of both index fund and an ETF is the same, that is to track S&P 500. However, the way ETF operates is different from the way index fund operates. Due to this operational difference, you can buy and sell ETF throughout the day just like any stocks. However, the index fund gets allocated towards the end of the day. The second major difference between ETF and index fund is certain index funds have a minimum investment requirement, which means you have to invest that minimum amount in the index fund. However, with ETF, you do not have any minimum investment requirement. You can start investing in an ETF with just $1. So let's jump into the main question. So how do you actually invest in S&P 500? Investing in S&P 500 is very simple. You just need to open your brokerage account, type in the ticker symbol of S&P 500 index fund or ETF, and then just place the order. Now let's talk about the top 3 S&P 500 ETFs. As you can see, these are the top 3 S&P 500 ETF, which are exactly the same product but offered by 3 different brands. Now the first column is asset under management. Asset under management is the total money invested in this ETF. And as you can see, the top 3 ETFs have anywhere between $300 to $400 billion of asset under management. Looking at the performance, we can see that there is not a significant difference in performance of the top 3 ETFs. Coming to the expense ratio, so S&P 500 ETF have the lowest expense ratio when compared to actively managed mutual funds. And as you can see, all the 3 ETFs have expense ratios less than or equal to 10 basis points or 0.1%. Finally, coming to the dividend yield, all the 3 ETFs have only marginal difference in their dividend ratios. Now let's talk about the top 3 S&P 500 index fund. As you can see, the 3 index funds offer the exact same product. However, it is offered by 3 different brands or 3 different asset management companies. And in terms of performance and expense ratio, there is not any meaningful difference between these 3 index funds. However, one of the key difference here is the minimum investment amount. As you can see, the Vanguard Total 500 Index Fund has a minimum investment requirement of $3,000. So to summarize, individual investors can buy S&P 500 through either S&P 500 ETF or S&P 500 index funds. And the process to buy is very simple through a brokerage account. If you want to learn more about the difference between ETF, index funds, and mutual funds, then refer to one of my other videos, the link to which I have shared in the description below. I hope you found this video helpful. Let me know your thoughts and questions in the comment section below. Thank you.